All right. So nothing looks like it's changed overnight. Went to bed and we were right around here. Woke up right around the same spot. There's a few things going on today. None of them look like they're really going to move the needle much. Looks like 30-year mortgage rates went up a couple of clicks. Then we got a bunch of Fed speakers today. Williams, Paulson, Waller. There's an auction. Then we got a bunch of more speakers. Bostic, Miron, and then another auction. And then we have the API, the crude APIs. And I guess Thursday is going to be a big day. We got jobless claims. Yada, yada, yada. So there we have it. And we're up about, what are we, 19 now? Yeah, 19 handles. NASDAQ is up about $1.30. Russell is up 590. Gold continuing its march higher, up almost 17. And volatility still staying, a little elevated. It's not like ballooning, and it's still below 20. Fixed futures 19.1. Bonds pretty much flat. Crude oil got a little bit of a bump yesterday, but that seems to have cooled off. So I guess, all is well again in the cornfield, as we say. Crypto, no real, Bitcoin looked like it might get a boost, but that didn't really go anywhere. Actually, the one that did was ETH, kind of bounced pretty nicely, but overall, no real, unless you're trading the crap coins, which I don't even deal with. So that's it. That's all we got. And pretty lackluster day. I think there was a couple of earnings last night. I think Oklo maybe came out with earnings last night. I'll take a look at that. I was looking through the list too last night, and I didn't really, I don't know, nothing looks, when the market goes up like this, we got that bounce. And if you didn't do anything in the last couple of days, it's kind of hard to look at individual issues right now. So as far as the market's concerned, S2 is interesting. Again, that's going to be that's a big move. 68.30, 75, but we're going to mark it anyway. $68 it comes out with $68.29. So, yeah. So we're going to put our alert in here. All right, and so that, let's get this aligned here a little better. There we go. All right, so that's this number down here. As far as the upside, we're kind of getting into the area of an R3, 69.10. So I'm going to mark that one, 69.10. It's another 20 handles or so. And not going to fiddle in the middle. Not going to fiddle in the middle. Obviously a lot of resistance overnight and yesterday up at that 69 honey. level, right here. So we'll be keeping an eye on that. I don't know if there's really a trade there. I think we get back up there again. Quite possibly it blows through there, but who knows. And not going to fiddle in the middle. So there's my kind of two spots there, and you can see we actually, did a really good job here yesterday bouncing off that. So that's it. That's really it as far as like the broader markets. I don't do the NASDAQ. I don't really care about the NASDAQ. So don't trade it. So there's a couple of spots. And then what I was kind of doing last night is I'm looking at the dailies here. And I was just going through some ETFs. And now I like to look at the ETFs, not so much that I'm going to trade them. I mean, although I like to trade them. But they kind of, I don't know, to me they give you a good idea about rotation, right? Where, where's the money kind of moving to? And one thing I noticed is that there is a bit of, and I kind of late to this party, I think, a little bit. I did notice that there is a bit of rotation going on into a lot of these consumer staples. And like what's in here, I don't know what honestly, I don't even know why they consider some of these staples, but they're likes of like Target's in here, Costco. There's quite a few retailers, a lot of the food companies, Pepsi, Coke, that type of stuff. Now, why are those staples? I don't know, but I guess those have just become staples, or they're staples because they're part of this fund. I have no idea. But anyway, there seems to be a bit of a rotation. And I actually drew this last night. Wow, look at that. I put a freaking arrow on there. So now it's definitely going to do that. But anyway, I'm definitely seeing some rotation here into some of these issues. And overall, this is actually, you can see this has gone basically no place. Since the summer, it had its push up to $84, and then it hasn't really done anything. It's chopped and slopped since. But, since making the bottom here, it is kind of, coming back in flavor, and it had a decent day yesterday. And if you look over the last 3 months, it's actually had a pretty decent move back. And so what does that mean is, I don't know. I think there's possibly a trade in some of these. And then I took this information and you compare it to some of the other sectors that have really moved, like healthcare. That's really moved, kind of feel like I already kind of got down on some of this down here, still have some of it kind of, to me, maybe getting near its, maybe not its top, but it's definitely going to get tired here as this gets higher and higher. So, I don't know if that's really such a good spot. Utilities have done really well. That's the XLU. Even materials, XLB, that's actually had a really nice move relative, kind of chopping and slopping right now. Communications, another one, has actually had a really big run. So I was kind of looking for something here that hasn't really moved to kind of get down on, because it does look like a lot of these sectors, and I'm not one to just kind of pile in. Here's the metals, obviously. These are the oil drillers, financials, energy. You name it. They've all pretty much had decent runs. And again, I'm looking for some place. I don't like to buy stuff after I'm not one to jump on the bandwagon. I kind of a little contrarian mostly. And I'm just looking for some place to maybe park some cash. And I may not catch this entire run, but I'm going to be looking at some stocks in this sector, in these consumer staples, which is like the Cokes, the Pepsis. Target was on there, as I said, Costco. And what I did was, what did I do? What in the hell did I do? What did I do? I went into, I wonder if I still have it. Yeah, I went into this, and I'm going to put this up here. And I got this, and all I did was Google search XLP. And I went in here. I've been on this site before. It's been a long time since I've actually been on here, but it's a pretty cool site because, you know, it does break down the bigger holdings in here. And so that's kind of gave me an idea. I'm like, yeah, why not look at some of these? I know some of them, a lot of them have gotten beaten up. And so anyway, lo and behold, and see if any of these align with our high option volume stuff. And so I'm going to go in here and rank by IVR and then go through here. And I did see Target on here, and there's Target. So Target is on there. It's also on the list on the other thing. I'm not going to trade the ETF. So look, let's just change gears here and put the XLP up here. The ETFs overall just tend to be pretty clunky when it comes to doing options, right? I mean, if I was just going to go and buy this, I would just go and buy this. You know, I wouldn't really mess around or dick around with options on XLP only because it's just, again, these tend to be pretty clunky. Although they may have like big open interest, a lot of this open interest is hedge funds and institutions hedging themselves. So they may be long the underlyings, and then they'll use the options in something like this to hedge themselves. And so, you know, and they tend to be very clunky and not really, I don't know, my experience, they just don't seem to work out very good, especially this one. Some of the other ones are much better, like the XLF is a little better, the XLE, the energy. This one in particular is it's kind of crap. And I don't even think it gets a good liquidity rating either on the scale. Yeah, it's like a 4 on the liquidity. Anyway, needless to say, Target's on that list. And Target also has earnings coming out on November 19th. So next week. And so, you know, good IVR too, good volatility in this one. So, you know, it's also in a sector that appears to be on the mend. So we got good volatility in here. There's definitely decent liquidity in Target. It gets a 4-star, but overall Target is generally okay. And so what I'm going to look for here is I'm probably going to go to December. Now, I may still do something in November, even though it's only got 9 days left. I still may do something in November next week for earnings. But for this, I'm going to go to December. And I'm going to sell a little volatility in here. And the way I'm going to do that is I'm going to put on a little iron condor in here, I think. You know, and kind of play it both ways. But I might skew this a little to the bullish side. And so how I do that is I actually just go a little closer on the delta on the put side than I do on the call side. And you might say, well, why are you doing that? Well, you know, look, I don't think the recovery in these staple stocks are going to be like, you know, they're not going to move the way these technology stocks move. Hell no. You know, these tend to trade pretty clunky. And then if you look overall at Target, just going back to a chart, Target has been an absolute hunk of crap. It has been a piece of crap. It's gotten pretty beat down. I mean, look at this. This thing has just gotten completely beat down. And this might even be like, you know, and I don't follow Target, so, but, you know, overall, this actually might even be, this might be like lows, like 5-year lows. Let's see. 2020. Yeah, I mean, you're talking close to 5-year lows here on Target. I mean, so this thing is like a complete piece of crap. I mean, is it over? I don't know, but it's got to be getting tired at some point. So anyway, with that being said, that's why I would be more apt to go with an iron condor as opposed to a, just going one side here. So what I was looking to do is selling the 80, which is about a 20 delta. And selling the 110. So that's my inside strikes, 80, 110. All right, and then the nice thing about this is that their expected move here out in December, which is important to look at, it's about $10. So I'm still outside of that range based on the current price. All right, and then what I'm going to do is just come in and cover this. Now, I could do one of two things. Now, you could just do the strangle. If you have the capital, buying power on this one's going to be what, $912? Max profits $258. Strangle doesn't actually look that bad. Again, if you have the buying power and you have the margin, right? So if you don't have the margin in your account, this a strangle is going to run you probably about $2 to $3 grand, maybe more. But if you do, and I happen to have margin in this account, it's only going to be about 900. So economically, it's better to do the strangle here. But given kind of where this stock is, I don't feel too keen on being naked up here. So I would prefer to cover it. And so that's the trade there. So it's the 80.75, 110, 115. And you can see here, I'm actually delta. So it's almost like I'm long 4 shares here. And I'm going to bring in $1.20, and my buying power hits only about 380 on this one. And I have close to a 70% probability of profit. And I got about 37 days for this thing to kind of grind through. It's going to go through earnings. Likely over that time up into earnings, this volatility rank will probably elevate because that's normally what happens, but that's not a big deal either. And so that is the trade. This is what it looks like on the curve. All right. And then we do our analysis and make it look pretty. And there you go. And there's the trade there. So it's the 80.75, 110, 115 iron condor on target, skewed bullish, right? Because I am getting some positive delta on this. And trying to take advantage of, a sector that's just gotten the snot beat, and a stock that has just gotten the snot beat out of it. And then the beauty of this trade is that if I'm wrong, I have all this distance in here to be wrong, right? I can be wrong basically down below 80 and higher than 110. And I'm going to get some theta, right? So I'm going to get some burn here on selling these options, right? Which means as time goes, this premium is going to erode away. I wish it was a lot higher, but it's relatively okay. And that's because we're out in December. If I was in November, that theta would probably be 3 times that because November's options expire in 9 days. So this one has 37 days. All right. And so now if you want to do this or increase your risk, don't do more contracts, right? So don't do this 2 or 3 times if you want to increase your risk. Widen the strikes. So instead of that, do a 110, 120, which is 10 wide, or an 80, 70. And then if you look down here, you could see my buying power a little more than doubled. It's now 822. But I'm also bringing in more money. I'm bringing in $1.78, almost $1.80 as opposed to $1.20. I also increased my delta, right? So now it's like I'm owning 6.5 shares. But I also increased my probability of profit by a little bit, not 1%, but not a big deal. But so that's how you change the risk profile of this trade. And the reason you do that, and the reason why we widen strikes instead of buying more contracts, it's commission. Because if I were to do this 2 or 3 times, the commission, it's only a couple of bucks, but that adds up. If I do this like 5 times, it's going to be almost $8 to $10 in freaking commission just to do an option trade, when if I'm looking to increase my risk, just widen the contracts. It's doing the same thing, and I don't pay that commission. And so there you have it. There's target. So you got kind of 3 ways to slice this, right? If you have the margin, we'll get rid of these. If you have the margin, just do the strangle. And you're familiar with these trades. Now, you need a special kind of account to do this. You can't just do this in any account. I say you have to have the margin. You have to have the margin. You also have to have the risk profile configured in your account to be able to sell uncovered calls. And calm down. Like, I mean, I have so many people come after me like, oh my God, you're short a call. Oh my God. The only people who freak out about that are people who have no idea about anything. Are there risks for having an uncovered call? Yeah, sure. Absolutely. No question about it. But if you understand what those risks are, it's just as bad as doing a trade on the ES with no stop and walking away, right? Same thing. So anyway, just be aware of that. And then if you don't, then just come in and cover it, and then widen the strikes. So there's my target trade. And that happened to come up on the list. I don't think I've seen any others come up on that list that had decent volatility. And I'm just looking through the list over here. And the way you get this list, this is a high option volume list on Tasty Trade. And for those who trade options, this is probably the best option list or stock list of stocks to trade that have good volume. And it's not just that the stocks themselves have good volume. The options on these stocks have tremendous volume, which is important. And just speaking of that, and not to beat a dead horse, but if you look at the open interest here on the strikes that I picked, they're extremely liquid. And how do I know that? Well, look at the open interest. Oh, wow, I got too many. Where did that come from? Delete leg. Okay. I'm looking at the open interest, and I always look at that when I do an options trade, because I want to make sure that open interest is equal to like who's got contracts, right? How many contracts are out there on this? I want to know, and I want to be in liquid strikes. And it's important that you look at that, because as easy it is to get in a trade, you want to get the hell out. And if it doesn't have any open interest and there's no volume, you're going to have a problem getting out of it. Trust me, I know. Been there. Doing this almost 30 years now. Actually, more than 30. I think it's like 32 or 33. But anyway, needless to say, you want to make sure that your options have liquidity. Because you'll get in a trade fine, but getting out of it, you might get stuck. And that sucks. Nothing's worse than being stuck in an option trade that has no freaking liquidity, and you're sitting there resending, trying to find a bid for it because nobody freaking wants it. and there's nobody there, right? There's got to be people on the other side of your trade. So just be aware of that. Always look at the open interest. And that's why I'm picking these strikes. And I didn't pick, some of these strikes down here, but most of these have open interest here in target. So, and that's why we're trading it. So anyway, just be aware of that. Anyway, I didn't really see any others. Here's Walmart. But what's little turnoff of Walmart being on this list and doing something similar to Target is that Walmart really doesn't have that volatility rank that Target has. That's, this may be elevated, and I have to look. Again, I don't follow Target religiously, so let's look at, and what I always like to look at is don't just look at the IV rank. The IV rank may be low, generally speaking, but the stock's IV rank may be elevated historically. And it does look like for Walmart, at least over the past year or so, a 38 IV rank is elevated, right? Because it looks like it runs at about 32 or so. 30 to 32. So it is elevated. They also have earnings next week. So same situation as Target. But I don't think this has gotten the snot beat out of it the way Target has. And again, I don't trade these like all the time, so I'm not religiously. Yeah, Walmart's actually done pretty well. So instead of doing an iron condor, I'd probably be more likely to do some kind of put spread or may just outright buy the calls. I don't know. I mean, I would like to see, if I was going to buy options, I would probably like to see this in the 20s. I don't know. Target's kind of a weird one here. Maybe a ratio, but the margins are going to be too high. Margins usually in Walmart suck, and what I mean by that is, so if you're going to do something uncovered, buying power is $1,500, and that's a little too rich. I don't want to really put that much capital to use in this trade. And you can see, really, even though the volatility is elevated in here, you're really not getting paid to sell. Let's see. Yeah, you're really not getting paid to sell anything in here. I mean, you could see the prices on some of these options. I mean, if I have to, even to get a buck, I got to go up to almost at the money. I got to go to like a 97.5. And if I do a spread, I'm only getting 87. So it's just not, there's no there. I mean, one way to play this would be, let's see if this one would work, is to sell the November. Sell the November. Let's sell the November 100 and buy the December. Let's see what that does. No, still not. It's going to be a debit. Yeah, I kind of figured it would. That might not be a bad trade there. Again, this one's going to be a buying power hit. You own about 12 deltas, doing it for 35 cents. I don't know. I just don't see it here in Walmart. I'm trying here. There's just no risk reward here at all. Yeah, there's nothing there in Walmart. Yeah. All right, and then the other one I was looking at outside that, so that's as far as the XLP stocks was just those two because nothing else is showing up on the list. With any kind of like, again, Walmart might be in play next week, and it probably will be for earnings, and we'll probably definitely do something for earnings. But as far as now and doing a trade, nah. It not works. It's a no good. It's a no good. All right. And then the other, I did do quite a few things. Then Oklo, right? Oklo, I talked about Oklo. I think there was something yesterday. I know I saw something on Oklo yesterday. Was there something going on with Oklo? It's up $4 today. So I think they did have earnings. It's not even listed on here. I think they did. It's up $4 today. So it kind of missed the boat on this. This has got a good IV rank. And with it being up $4 today, I don't even know what the hell you would. I don't think you can do anything with it. Let's see. I have it in here. Yeah, they did have earnings. They did. And it doesn't look like it was any good, though. All right, I guess no news is good news. Bad news is good news for them. Good bounce, though. I don't know. This looks... I mean, although it looks interesting today that it bounced $4, but it's in the right sector. This looks like a Head and Shoulders, right? For those pattern folks. Right? I don't know. To me, it kind of does. That's the 1 hour. Right? Left shoulder, right shoulder. Oh! Head. Neckline. All right? Yeah. I think so. I don't know. That's what it looks like to me. And Head and Shoulders, bad. Head and Shoulders, no good. Head and Shoulders is no good. Right? We got the neckline down here. I'm not going to go in here. You can figure it out. But that's on the 1 hour. Let's see what it looks like on the 4 hour. Yeah, it's still there on the 4 hour, too. There it is. So, again, I'm not completely crazy about patterns. I mean, it's nice to know that they're there, but, you know, you have to be aware there's some people and some institutions and everything else that actually trade on these things. So it does, you know, it might have an impact. You know, and is it coming out of the Head and Shoulders here? At this point, I don't know, but even though we're getting this bounce, there just seems to be a lot of stuff that, you know, even technically, it does not look good. So let's go look at Oklo, with that being the case. And now we're up $4 and good volatility. This is likely going to collapse today. Let's go to January. And let's look at a call ratio. Yeah, the margins suck. I figured the margins would suck in here. But you got option premiums in here that are just exploded. I mean, look at this open interest out here. You got a lot of bets being played out here. I mean, I'm out at 155. We're at 108. This is one standard deviation here. So the ratio looks really nice if you have the capital. $2,100, but you're going to bring in $700 on this trade. This is going to be actually less because we're up $4. This is going to be much less. This is probably going to be closer to about 6. My forecasts are pretty good. It's probably going to be about 625, maybe even be a little less. And then you're going to get this volatility collapse. So again, this might even go under $6. But you know, given, and let's look at the curve. And the reason I would like the call ratio here is because, again, you're selling this volatility and this explosion in the option prices, but you're giving yourself, I got huge amount of upside protection, up to 165 on this. I'm out in January, so I got 65 days. I don't know. I mean, I got to see how this opens, but I kind of like selling calls here on Oklo. So that's probably a little more risky trade. But if you're to do something even more conservative, you could definitely sell a 150, 160 calls. Oh God, there we go. Sell a 150, 160 call spread. In here, one standard deviation. I don't know. Again, I'm kind of on the fence. I got to see how this opens. Again, up $4. I kind of like the idea of selling some calls on this. Again, it's all these things being contrarian, high volatility. That's going to collapse today because earnings came out yesterday. Really nice open interest up and down here. Let's take a look at December. Like for maybe even a day trade too. Maybe we day trade some options. Let's go to November. Maybe we day trade some options today. You look at November though, and there's not really, I don't know, to me, there's not really a lot of open interest here up and down. They obviously added all these strikes in here. And the reason I know that is because look at the open interest at the 5s and the 10s. You got 2,000, 1,000, right? And these are all new because they don't have any open interest. So they've added these recently. But I would have expected this to have a little bit better. I would expect these numbers to be 4,000 and 5,000, to be honest, in November, but they're not. If I were going to sell some calls on this, I would probably do, and these are going to explode today because this is up $4. I'd probably do the 120. I definitely wouldn't do the 110. I would either do the 115s or the 120s. These or these. These or these. But I have to see where this opens. And what I would do is, again, instead of shorting the stock, you come in and you just sell these calls and try and do them for a day trade. So try and sell the calls like right out of the gate. See, you're going to get that balloon first 5-10 minutes. This is going to open. These calls are going to just pop off the chart. And then you're going to have that rush of, everybody running to the gate like, oh, let's get out and let's lock in our profit. Anybody did anything, and has profit to lock in, and then go and sell those, and then look for two things. Look for this volatility to collapse, which will cause the options, and then kind of have this peter out and even stop going up. It doesn't even necessarily have to go down. It just needs to kind of level off and stay put. So that's one I'm going to be doing, I think, for the open here. This one's setting up really nice for that. So either the 115s or the 120, depending on where it is when it opens. But I like the 115s, and they're likely going to be about $7, I think. They're probably going to be about $7. So if I can sell those for $7 or $8 and then buy them back for $5 or $6 in a day as a day trade, that'd be a good one. So Oklo for a possible day trade. There's a couple other things hitting the tape that don't look very interesting though, but and I think that's it, really. That's all I had. I mean, boring day, market's up. I would have liked to see us down like 20 or 30 handles, to be honest. I think it would have set a few more things up. I guess last but not least is going to be Oracle. Now, I have so much Oracle, I don't even know what to do with it anymore. You can see I'm out in March, I'm out in December, I'm short puts. I mean calendar spreads. They are just beating this thing. They just seem to be beating this thing to death. But overall, this stock is a option seller's dream right now because A, it's extremely liquid. It's run up really fast. And it's coming down and backing down really fast. And so volatility is off the charts in this. I mean, 79 for a big stock like that is actually great. And you can see historically, this is really, really high. And you can pretty much do anything you want in here from an option point of view if you want to sell options. You know, obviously it's going to be a little more difficult to sell, I think, the calls just based on the fact that it's come down so much. But, you know, I mean, look, I mean, if you're looking to sell puts in here, I mean, anything 210, in my opinion, or lower, you can sell all day. And it may not be a methodical comeback on this, and it may not snap back fast. But even if it stays right around here between, let's just say, 225 and 250 in the next 37 to 45, 60 days or so, you're going to win because this volatility is going to collapse. They do have earnings coming up. I think it's not on here. Oh, yeah, it is. December 8th. So they do have earnings coming up. But in my opinion, this is a put seller's dream in here right now. I think you do got to be a little aware of like which ones you're selling. Like I wouldn't go close to the money. I mean, again, if you want to, go ahead, right? You can do whatever you want. You're all grown up now, but maybe you're not. But hopefully you are. And I think if you pick anything 210 or less, you can sell puts in here all day. But just be aware, you're going to sit on these for a while. And again, look at open interest up and down is just phenomenal. You know, and if you want to buy calls, go for it. I just think they're overpriced. I just don't think I think you're paying too much to buy calls. It's definitely worth selling puts. Even a spread. I mean, you can get almost, if you did a 210, you're getting over $100 or $200 to do a 210 or $10 wide, but you're getting over $200 to do a 10 wide. I don't know. To me, that's a lot of bang for your buck here. And that's in December. And obviously, if you go out further, if you go out to January, you're going to get more. Right? You're going to get $5 on a... I think Oracle's definitely a put seller's dream now. But be aware of the strikes that you're doing. Like I think 210. You know, if you want to get aggressive, go to 220. But you're going to hold these. You know, these aren't going to just rot away quick. You're going to have to wait for earnings, right? Because December 8th, so you're going to have a couple of weeks and before the volatility kind of gets flushed out of there. So that's kind of going to be the deal with Oracle. Also was looking at Lulu. This is another one. This stock has just gotten, you know, I look at this one on the charts. This one has just gotten absolutely pummeled. Absolutely pummeled. The glory days of Lulu pants are over. And what do they say? The fat lady ruined Lulu. And they did. The fat ass, tub ass, pear assed ruined Lulu, man. They did. No business wearing them. You know, and I'll probably get hate for it, but you know what? You got a tank ass and you got a pear ass. Don't be wearing Lulus, man. Do not do it. But this stock's just gotten absolutely pummeled. But, you know, there's another one. Good IV rank. This one's not as liquid It's got a 4-star. I don't find Lulu to be very liquid, though. I've had a lot of problems with it over the years, getting in and out of trades. Not to say that I'm not going to trade it anymore, but another one that's gotten beat up. And I think you can definitely do a two-sided trade. Margins in here generally suck too. Actually, they're not that bad here. Let's see, a 1 standard deviation strangle. Oh, wow. 1 standard deviation strangle looks pretty damn good. And it's actually a little inside the 1 standard. That's the 135, 210. This is the 1 standard. But that even looks good. The 130, 210. And then let's look at this one on the curve. Zoom in a little bit. 130, 210, bring in $5.20. It's going to run you about 1,700 in margin. Let's see. I don't know. I kind of like keeping this one at the 210, and it looks doing this actually gives me negative 111 deltas or negative 11 deltas. I actually like moving this up. So anyway, just looking at a few other things, right? Open interest is fine in here, right, up and down, but we're looking at like a $26 move in December. So I would bring this side up to like a 140. Bring in a little bit more money. I'm kind of pushing the delta down. I don't know. I kind of like being neutral in this one. And I think to bring this to neutral, you got to do the 145. Yeah, you have to be at the 145 to basically make this delta neutral. But the problem with that is that you're literally like right on this $26 move. I kind of like the 140, even though this is skewed. And I would do this. I would do the 200, the 140. Here it is right here. Yep, the 140, 135. I'm going to have to do 10 watt because it's 10 up there. So it's the 140, 130, 200, 210. And that's not a bad trade. I kind of like that one. I kind of like that for a Lululemon. So in Lululemon, the 140, 130, 200, 210. You bring in $300, 650 buying power, 64% pop, basically delta neutral, which is kind of perfect, and outside of the expected move in December, 37 days. And if you have the capital, so there's kind of stage one. And if you have the capital, I actually like the pure 1 standard deviation strangle, which is the 130, 210. Strangle. 79% pop. Good theta, right? You're always going to get theta. On uncovered options, the theta is always going to be better. Skewed delta negative. Buying power 1,700. But just be aware of the risk on that one. I actually like that one better. But again, I can't do this in my IRA. I could do this in my trading account. I can't do this in my IRA. I have to do the Iron Condor in my IRA. So, because it's covered strategy. All right, so that's it. That's all I got. Yeah, I ran too long as it was. But there you go. Quite a few trades today. Tarjay, slice and dice that one. Oklo. Lululemon. Talked a little bit about Oracle. Talked about having sex in the office. All those important things. So that's it. That's all I got. Market still looks like it's meh. Still looks like it's a crap. Yeah, it's a crap. Chopping and slopping. Getting up to this spot, though. All right. And so, all right. That's it. That's all I got. Have a good one. And hopefully I'll be back tomorrow.